And a highlight, Dave here spotted the Russell. That's the chart here in the bottom right. See this box? Anytime you kind of have a box, there's a chance you could pop out of it. And the Russell goes, and we had a unique stuck short here in the ES. And if you were bullish, even if you weren't, you took a shot to buy it. Let me take us to where, oh, I went too far. That was another example. So was it the upside or was it downside rally or was it a sell-off? I can't remember. But here's an example of where you could see, if you look at my cursor, you don't want to be long, especially if you're trading the Russell, but you got to say, if this market starts to get below here, the Russell that is, they could really drive it. So just watch it and they crack through it and they go. That only helps the ES go lower and the NASDAQ go lower. You know what I mean? And so find a moment where that Russell popped right in here. This was good. So it's coming out of the top of this box, okay? And we were looking for a reason to see it bounce and go back to a big 400 lot that came in on the open. In fact, I'll show you that in a second. So it's bearish below a big open order like that, but it usually likes to go back up there. And so if you look at this, let me just take it back right to there. A couple things. You get a whole bunch of shorts that lined up. Okay. Even if I take it back to here, you go from our green laser, red laser, shorts, shorts, pop, shorts. All right. You're still looking at the Russell. When is it going to go? If you're not long, because you got all these shorts in here, then you're missing it. I mean, you're having a reason to get long. And then you have more shorts come in. And then the Russell really popped through the top of that box. And upside was the right side. Bam. So that's what's important. Now, look at this big green that sticks out. That came in on the open. I started recording right on the open. And it came in. And anytime a big order, 200, 300, 400 comes in right on the open, it usually calls direction when it gets above it. When it's below it, you got to be careful because it's bearish below that big long order. And then at some point, it's going to come back and act as a magnet. And so it's one of those things where below it, you got to be careful long, but we are going to make an attempt to go back to and through it, which we ended up doing. So it gives a lot of good information. And probably once a week, we'll get a big order to come in on the open. And it really is a great pivotal price for most of the rest of the session. And so, but again, when we're just flying through, I think we had another example before I, shut it down where if you look at this, I love it when it gets red and some gray pops in. That's like the market saying right in here, I'm short. Oh, wait, let me out. Please let me out. And then they let them out fine. If they don't, it's usually a chase. And you see all this red come in on the chase. So markets are all about a couple things. They're about open positions and correlation. Order flow to read open positions, and then looking at other markets, ancillary markets for correlation. And if that sounds familiar to you, it should, because it's what you used your whole life to value everything else with a price attached to it. But for some reason, people open up a trading account and they ignore all the techniques they use to value the price of cars and houses and plane tickets instead of embracing it. Why wouldn't you embrace the two techniques that you use to value price? Because that's what trading is. You're valuing price in order to see if it's cheap enough to go up or expensive enough to go down, and sharpen your predictive skills of where it's going to go. Why would you ignore the techniques that you've used your whole life to value the price of everything you bought and everything you sold when you get into a business where you're buying and selling? Do you take and use Fibonacci when you negotiate price at a car dealership? Do you use moving average crosses when you're trying to determine if the house is cheap enough? Do you go and look at where Andrew's pitchfork is? Do you believe there's even a study that's called Andrew's pitchfork? Do you use that when you go to try to see what the cheapest airline is flying to the destination you're flying to? You don't need the big drop down window with all the tools. It's all crap. It all comes down to buyers, sellers, long, shorts, and where other markets are. Correlation, market correlation to another market or a news event. That affects price. A news event's right kind of has that compare contrast. The Fed, those are all relationships, market relationships between a news event or another market. If I'm long the ES, I want to see the NASDAQ and the Russell and the Dow grab a bid, right? All the indexes grab a bid if I'm already long. That's only going to help my long position to continue to go north. You certainly don't want to see the NASDAQ go down if you're long the ES. That wouldn't be helpful. So just make sure whatever tool you're using, sit back and say, does that make sense? Why this would, does it have any relationship to how you value the price of a house? The tools you're using to trade and predict price, does it have any connection to the tools you would use to predict price of a house, of a plane ticket, of a car, at a brothel, legal ones? We're going to end on that note. Have a safe rest of the night, day. Careful, volumes are subsiding. But remember, the upside, the grind through those 83s like we talked about. And then watch for any news coming out, Ukraine and Russia.